So you put money into that startup, and like an old rickety roller coaster, you get whiplash by how fast the founders moved on and left you in the dark. No updates, no emails, or no news. You don't even know if they're still in business. I mean, their website's still there, but let's be honest, so is MySpace. And we all know there's definitely no one at MySpace. See, this cold shoulder can be one of the most frustrating parts of early stage startup investing. But take heart, I've got your back. See, in this video, I'm going to shed light on 3 often hidden truths that will help you better understand what more than likely has happened with your money and when you could actually see a payday. And as a bonus, at the very end, I'm going to give you a power statement, something that you can copy word for word to get an update from those founders today. So with that being said, let's dive in. Hey there, I'm Crwd, and I've invested in over 20 startups currently valued at more than $500 million. And I'm on a mission to inspire and educate everyday investors on how we can build life-changing wealth through startup investing. Welcome to the Crowd. So as promised, here are the 3 truths that you must know about what happens to your money after you invest. Truth number 1. I don't know how to sugarcoat this, so I'm just going to say it. They've already spent your money. Now, I'm kind of joking, but not really. See, the reason that they raised money was because, well, they needed it, right? Maybe it was to hire staff or to market the product or the company, the software. Maybe it was for inventory. Maybe it was to take an executive retreat to Bali. Let's not hope that was the case. But no matter what the reason, cash flow is king in growing and scaling a business. Now, sometimes companies do actually blow all of your money, and it's just not pretty. See, at the end of 2022, news broke that one of the most successful startups to ever raise in the equity crowdfunding space quickly and unexpectedly shut their doors. The company that I'm talking about is NowRx. Now, for those of you that did invest, you were hoping and holding your breath with a sigh of relief, hoping it wasn't your company. For those of you that did invest in NowRx, I'm sorry, but let me tell you how it all unfolded. See, they set out to compete against GoodRx and Mark Cuban's venture, Cost Plus Drugs. Now, the idea was a great idea, right? Get the people to invest in this venture and they could use the service as well, right? Power to the people. But here's the problem. They just didn't have pockets that were deep enough to compete with the likes of GoodRx, who went public in September of 2022 at a $1.1 billion mark. Now, that is some deep pockets to crush any little guy and any newcomer. And of course, with Cuban's backing, Cost Plus Drugs, they actually have the deep pockets they need to grow and last the long term. Now, as for NowRx, according to Crunchbase, they had raised a total of $79 million. 25 million of that coming from the crowd. And the bummer about the whole thing is that a lot of investors lost a lot of money, 25 million to be exact, from everyday retail investors. Now, if you invested in NowRx, I am so sorry for your loss. Thankfully, I never invested in NowRx, and I hope you did not either. So here's the good news though. This isn't the tale for all startups. And hopefully the startup that you invested in put that money to good use and they are scaling. All right, let's dive into truth number 2. Truth number 2, you need to make sure that your investment is converting to equity so that you can one day see your money and a bunch of new friends again down the line. Now, let me explain what I mean. Most of the early stage startup offerings typically don't let you invest and receive actual equity in the company right out of the gate. You'll see things like a convertible note or a safe note, simple agreement for future equity, meaning this gives the founders some time to kind of grow the company and figure things out as they move along. Now, it doesn't always work out this way, but to better paint this picture, we need to look at the life of an American hero. That's right, I'm talking about Daniel LaRusso, aka the Karate Kid. Now, for this example, let's just say the Karate Kid is a budding startup, the startup that you invested in. They show up, they're the new kid on the block, but they're hopeful that they can make an impact in their brand new town. Well, they basically head out into the world and get beat up by the market, by customers, and they don't really know what they're doing, but they know that if they want to survive, they need help. So what do? they go out and find someone that can help. They find advisors. They find investors. Basically, they go find themselves a Mr. Miyagi. Now, by the way, that's you. So as this startup's Mr. Miyagi, you invest in them and you send them back out into the fight with some capital in hand and some confidence. And ultimately, like Daniel LaRusso, we want to see this startup win the trophy, aka grow and scale, right? They want to see them doing big things. And as they grow, they need more investments. And this is usually when your investment converts into equity. You own a piece of the company and you're locked in. Now, after that, once things go well and they get the girl, aka exiting or IPOing, they start returning you your money and hopefully with a whole bunch of brand new friends. So maybe the next time you talk to the founder of the startup that you invested in, just ask him this: have you been catching flies with chopsticks? And then just gracefully bow. And they will look at you confused, but you will know that you are their Mr. Miyagi. All right, let's dive into the third and last truth that most investors just don't know anything about when it comes to investing in early stage startups. The thing you got to know is that there's going to be a transfer agent involved, and they're the ones that are going to give you your money. So when the big day comes that the company exits, or it's time for them to IPO, or it's time for you to get a check or shares, you're not going to hear from the startup. You're going to be hearing from their transfer agent. Now, it's standard that startups work through a transfer agent to communicate any updates that the startup has with their investor. The transfer agent is simply a middleman. They're going to be the ones that make sure that all your information is correct and that you will get the exact amount of money or shares that are due to come your way. And if you're not sure who your transfer agent is, well, all you have to do is ask the founder that you invested in, and they should let you know that information right away. Also, another fun fact about transfer agents: if you want to actually print out physical copies of your shares, typically most transfer agents, for a small fee, will print those shares out and they will send them to you. So at your next neighborhood cocktail party, here's what you need to do. Just leave your shares lying all around the house so that when your buddies ask you all about it, all you have to do is look at them and respond with, "I'm basically Mr. Miyagi," and then walk away.
Man who catch fly with chopstick accomplish anything.
So there you have it. 3 truths that no one really talks about in the startup investing process. Now, I'm sure you're itching to know where your Karate Kid is in their journey. So I'm going to give you this simple statement that you can literally copy, paste, and drop on the same investment page that you made your initial investment on. Maybe a few months ago, maybe it was a few years ago. And it goes like this: "Hey there, I invested in you back in," fill in the month and year. "I was wondering if you could provide your investors with an update. I'm curious, how's revenue? How's my investment? Has it converted into equity yet? And what big milestones has the company hit recently? Thanks," insert your name. Copy, paste that sentence, drop it on the campaign page where you invested, and hopefully you'll get an update from your founder right away. Hopefully those nuggets of truth will make this investing roller coaster ride a little bit more enjoyable for you and a little less whiplash. Speaking of wild rides, I'm on a mission to do something that has never been done before, and that is to be the very first guest judge in Shark Tank history to represent you and me, and represent the people. And I'm going to share my master plan with you and how it's all going down right here. I think you'll be surprised at how we're going to be able to pull this off. Check it out.